The American stock market stands as one of the most influential financial ecosystems in the world. It represents a dynamic platform where investors, corporations, and governments intersect to raise capital, allocate resources, and measure economic health. From Wall Street's historic trading floors to today's high-frequency electronic platforms, the market's evolution mirrors the broader story of American capitalism. The roots of the U.S. stock market stretch back to the late 18th century. In 1792, 24 brokers signed the Buttewan Agreement under a Buttewan tree on Wall Street, laying the foundation for what became the New York Stock Exchange (NYSE). Over the centuries, the market has weathered wars, technological revolutions, and economic crises, continually adapting to shifting social and economic landscapes. Primary exchanges dominate the American market, the NYSE and the NASDAQ. The NYSE is known for hosting many of the world's largest and oldest corporations, while the NASDAQ, born in 1971 as the first electronic exchange, became the home for technology giants like Apple, Microsoft, and Amazon. Other platforms such as the Chicago Board Options Exchange (CBOE) and regional exchanges also play crucial roles in derivatives and niche trading. The ecosystem involves a diverse set of players. Institutional investors, savings funds, mutual funds, hedge funds up vast sums of money and often set market trends. Retail investors, empowered by online brokerages and mobile apps, have become increasingly influential. Market makers and high-frequency traders provide liquidity, while regulators oversee fairness and transparency. Indices serve as barometers of market performance. The Dow Jones Industrial Average, comprised of 30 blue-chip companies, provides a snapshot of traditional corporate America. The S&P 500 offers a broader view of 500 large-cap firms, while the NASDAQ Composite reflects the pulse of the technology sector. These benchmarks guide investors and shape economic headlines around the globe. Stock prices reflect a continuous negotiation between supply and demand. Investors consider corporate earnings, growth potential, macroeconomic indicators, and even investor sentiment. Advanced valuation techniques has discounted cash flow model Excel with behavioral factors, making market movements both analytical and psychological. The U.S. Federal Reserve exerts powerful influence over the market. Interest rate changes, quantitative easing, and monetary policy announcements can send shockwaves through equities, bonds, and currencies. Traders watch every statement from the Fed chair for clues about inflation, employment, and future policy direction. Economic data: GDP growth, unemployment rates, consumer confidence, and corporate earnings directly into investor expectations. Positive surprises can spark rallies, while weak reports often trigger sell-offs. Investors also monitor global developments, including geopolitical tensions and foreign central bank actions, as these factors affect American companies and currency exchange rates. Today's market operates almost entirely electronically. Orders are routed through sophisticated algorithms that match buyers and sellers in milliseconds. Investors can choose between market orders, limit orders, stop-loss triggers, and complex option strategies, tailoring their risk and reward profiles. Regulatory bodies such as the U.S. Securities and Exchange Commission (SEC) and the Financial Industry Regulatory Authority (FINRA) enforce rules to protect investors and maintain fair markets. They monitor insider trading, fraud, and disclosure requirements, ensuring that listed companies adhere to strict reporting standards. The American market has endured dramatic downturns: the 1929 Great Depression crash, the 1987 Black Monday, the dot-com bust of 2000, and the 2008 global financial crisis. Each episode reshaped regulations, investor behavior, and market infrastructure. Yet each recovery reinforced the resilience and long-term upward trajectory of U.S. equities. From electronic trading to mobile investing apps, technology has democratized access to the market. Platforms like Robinhood and Fidelity's zero-commission trading lowered barriers for retail investors. Simultaneously, artificial intelligence and algorithmic trading have increased speed and complexity, raising questions about market stability during extreme volatility. The American stock market sets the tone for financial centers worldwide. Movements in the S&P 500 or Dow Jones often ripple through Europe and Asia overnight. U.S. companies listed on domestic exchanges account for a significant share of global market capitalization, underscoring the country's economic dominance. Investors employ diverse approaches: long-term value investing popularized by Warren Buffett, growth investing targeting innovative companies, and short-term trading strategies like swing trading or options hedging. Asset allocation between equities, bonds, and alternative assets remains a cornerstone of risk management. As of the mid-2020s, the market grapples with inflation concerns, evolving monetary policy, and the integration of environmental, social, and governance (ESG) criteria. Emerging sectors such as renewable energy, artificial intelligence, and biotechnology attract significant investor attention. Meanwhile, debates around cryptocurrency and digital assets continue to shape future market structures. The American stock market remains a vital engine of economic growth and wealth creation. Its ability to innovate, recover from crises, and attract global capital ensures its relevance in the decades ahead. Whether you are a seasoned professional or a first-time investor, understanding its history, mechanics, and evolving trends is essential for navigating the ever-changing financial landscape.